The market is recovering. Is this time to get in? Hello guys, welcome back to the channel, best place for long-term stock investors. As a disclaimer, none of what we say should be taken as financial advice. This is purely educational.
Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it.
Okay, MJ. So
Yes.
the US has just reported their latest US inflation data. And will the inflation rate maintain at 7% or will it go lower?
Well, it's as always with anything, the global economy is concerned, it's always hard to know. But I think we can look at certain signs and certain trends to give an approximation. Now, when you look at inflation in general, right, there's two components. As with anything that has to do with a price, all right, it's demand and supply. So if you look at the supply side of the equation, right, most of the inflation over the past year or so has been caused by supply issues, right? So we have the supply chain, of course, and then commodities have been rising, and so all of this actually feeds into the inflation. So you can see here, right? This is what it roughly looks like.
Right.
Okay. Now, what has been somewhat ignored is the demand side, right? So if you think about it, even if your supply is quite low for any goods, right? Let's say if the supply of diamonds is low, but if nobody wants diamonds, then it doesn't really matter. Even if you are the only guy in the world supplying diamonds and no one wants it, it's worthless. Your diamonds are worthless, right? And so it will drop, right? That's the basic idea lah. So what you can see here is that the proxy, right, to get a sense, especially in the US, and now the US consumers are the most powerful consumers in the world. If they stop spending, the cascading effect for the entire globe is going to be massive, right? That's a famous phrase, when the US sneezes, the world catches a cold. Now, if you look at the consumer index issued and produced by the University of Michigan, which I believe is the most comprehensive one with the longest set of data, they are currently, even though there has been a bounce back, they are currently at the lowest that it has ever been over the past 30 years.
Right.
Right. So there's another chart I didn't quite put here that I put and expand further in our FIRL Pro program, is that when the consumer sentiment is the lowest on a historical and average basis, that's when it gets most attractive to be in the stock market. The gains become more interesting. But of course, this is based on S&P 500, right? So you can't, unless you're buying the ETF, please, again, analyze each of the individual stocks.
Okay, all right.
Now, one thing that's quite crazy, just to add on, is that the Philadelphia Federal Reserve, right, they predicted that the jobs for Q2, right, is going to be less than 1.2 million, right? They just revised.
Right.
And the crazy one is, just read out, in aggregate, right, 10,000 net new jobs were added during the period rather than the 1.12 million jobs estimated by the sum of the states. That's a massive difference, Imagine getting it so wrong, right, in terms of the estimations. But all this will contribute to demand. This is what we call more of a, leading indicator. So this is more like the future. And this one is more what has happened, right? So that is absolutely crazy. And all this affects demand.
Okay. So speaking of inflation, we also need to talk about interest rate, right?
Of course.
So, well, the Fed actually did announce something that they will raise interest rate to 5 to 5.25% at the end of 2023. So that is their estimation. So actually, is this good or bad for the market?
Well, a lot of the expectations of the market is already that the interest rates will keep rising.
Yes.
So unlikely people are going to sell off just because interest rates come, right? It's possible, but it's very unlikely. As far as it's good for the market, if you watch some of our previous videos, you know that I'm of the view that the Federal Reserve's and interest rates in general does not need to be so high so fast. So one thing that I think Bank Negara did really well is to assess the situation very carefully. I think they got a lot of flack, right? Because they're like, hey, US interest rates is rising so fast, but Bank Negara is not, and the ringgit, is depreciating, stuff like that. There was that whole big complaint a couple of months ago, right? We did videos on it.
Yep.
But what Bank Negara was looking at, or at least I suspect, is that, but the causes of inflation are starting to already reduce, right? Which is the supply side of things.
Yep.
That is, energy, typically energy and supply chain stuff, right? And commodities. So they're saying, look, if that is really reducing, why should we need to raise interest rates and cause more burden on companies, on people, right? Their car loans, house loans, and things like that. So they stay put, whereas the US didn't, and they go really high. So them raising interest rates, I would say that it is some sort of it is a negative to the economy in the current conditions, because it doesn't make sense for them to do it, given that inflation is already slowing down. But as far as the market is concerned, unless we see more massive layoffs or businesses missing earnings, I don't see it like going down like a lot, right? But individual companies, you just never know.
Right. Okay. Since we are still in the topic of interest rate, right? Will the rate be over what they have estimated, about 5.25%?
Well, given that the Federal Reserve, as you can see, has had a history, or any economic institution, respectable even, they tend to miss out, right? I.e., they don't analyze it carefully. Not carefully, rather. They don't predict it accurately. Yeah. So they are likely to miss the mark.
Okay. It's fair enough.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Of course, inflation rate, interest rate, then we need to talk about the tech stocks, right?
Yeah.
So at the moment, the Bursa tech actually has been remaining flat. I mean, although there's like a slight rebound, but if you take into account the hike, but then it just rebounded a little bit and now it's like flat. So why is that the case? Yeah,
so I think that, when it comes to investing, there's really only two big drivers of why a stock price goes up, and that is improving fundamentals and liquidity. So even though there seems to be hints, right, in the Federal Reserve that they are going to loosen on liquidity tightening, which would be seen as more positive, right, for stocks, it seems to me that right now for Malaysia, the fundamental part of investing is a bit stronger. Now, what does it really mean? Well, I think the two countries that we can always look to get a sense, right, of where the semiconductor industry is growing, which is, where Malaysia is located, would be Taiwan. So you can see, Taiwan is, it's only lower. The only time where it's the business mood, right, is lower is in 2008, 2009, and it's close to 40, right? So anyway, below 40 will be a contraction. So maybe I zoom in for the benefit of whoever.
Yep, sure.
It, right?
Yep.
So that's Taiwan, and then I think the second one is Korea, right? So TSMC, Samsung, these guys represent a big chunk of their respective economies. So as you can see, so there has been a bounce for Korea, right? But it's still below 50 levels. So in general, the two major countries that you can use to get a sense of where the semiconductor industry is growing is on a decline, but showing signs of recovery. And all this, if you link back, right, to this chart here, it kind of makes sense on. So if US people are not buying stuff as much, or they're not as bullish, right? Guess what? Less phones will be bought, perhaps less cars, And you can see now in the US, I didn't have the chart here, but the housing is really, it's not a crash, but it's so far, but it's been doing quite badly. So all of this contributes to why, you know, the Bursa bounce for the tech is not as big yet.
Right.
But of course, as an investor, we always look ahead, not exactly what's happening now. So certainly, it's starting to get a bit more attractive today, right? Because again, consumer sentiment is at
all-time low.
Right? So it's really two things. Either you think that, oh, it's bad, or you think that, wow, it's gonna flip. Because and I'll go a little bit of psychology here. You know how when like it's really good, but then sometimes you feel like, oh, there's something niggling, there's like negativity, you know, that you try to put in your brain, right? Even though everything is good.
Yep.
Then the same thing is when, you know, there's a lot of suffering and you think mood is a bit gloomy, but then there's something inside, right? Human beings that just want a bit that positivity, and so that explains really the cycles of things.
Right.
Yeah, we cannot stand when it's perfect, you know.
Yeah,
ruin
exactly.
it, you know?
Yeah, hopefully there will be a Santa Claus rally at the end of the month and going to 2023. Okay, so I think that's about it for today's video. Do you have any final thoughts?
No, all good.
All right, okay. Thank you so much for staying until the end. Make sure to check out all of our free stuff. Links are all in the description and in the comments. Also, don't forget to follow us on our social media, Facebook, Instagram, Telegram, all those good stuff. Links are also at the description and comments. And we'll see you in the next video.